It's September, and we have another Austin real estate market report for you. I'm David Shapiro, real estate agent here in Austin, Texas, along with my compadre Lee Abraham. So
Hello,
let's
everybody.
dive into the stats and see what we're seeing in the Austin real estate market right now. So here you can see the number of active listings hovering around 2,600. So we've had some stability over the last 4 months. Big change from what we were seeing in early 2022, where there's really limited inventory. And then with interest rates rising, we've seen a fluctuation here in the number of listings that are available, but still relatively low in the big scheme of things. And let's take a look here at the months of housing inventory, Lee.
Yeah, so if we take those 2,630 listings, and then how fast are homes selling? Well, over the past 30 days, we've sold 724 homes that have gone into escrow. That gives us about a 3.6 month inventory. Interestingly, David, those are the same exact figures, give or take one sale, as compared to the past month of closed sales. Typically, the pending sales have been higher than the closed sales, but now we've got an equal number over those two time periods, and that's telling me a story that's beginning to unfold. We'll see if it continues over the next few months, but sales are down, and that's a reverse in trend over the past several months, and we'll parse that out a little bit. But if you look at the past 12 months, the average sales per month was 688, just under 700. Bottom line, however you look at the numbers over the past 12 months, we're somewhere between a 3 and a 4 month inventory of houses available for sale in the city of Austin.
Yeah, and so the 3 month average was almost 800 sales a month. So we're a little bit lower than what we were the previous couple months, but definitely higher than the average over the last 12 months.
Right, and what we're going to see is things are really interesting over the past several weeks. So here we can see the 30-day monthly housing inventory. Again, this is based on pending sales, and we're nudged up a little bit at 3.6, but again, really kind of fluctuating between that 3 and 4 month inventory mark. So this is not a lot of new information on this particular chart.
Okay, and when you said it'll be interesting to see the weekly data, that's when we get to our barometer a little bit later, right?
Correct.
Okay. Number of sales per month, so that's down 8.5% year over year, down 5.5% month to month. And one thing we always caveat with this is that we're doing this pretty early in the month, and these sales data trickle in over the first couple weeks of the month. So considering it's September 3rd right now, this number could come up a little bit. And we've usually seen it, like it could come up to about even. And you can see going back to July, we had just as many sales in 2023 as we did in July of 2022. Actually outpaced it by a couple once all the data came in. So what we saw early in the year, which was what seemed like a big decline, and especially when you look back to last year, when there was, at sometimes 45% decline in the number of sales per month, we're now about on par with what we were doing last year in terms of the volume of sales.
Yeah, and so it really raises a topic that we're bringing up probably for the first time in these reports, which is this the new normal? Is this really what it's going to look like going forward? Because historically speaking, you can see from 2018 to 2021, well over 1,100 sales a month for the month of August. But are we stabilizing now, at a more of a 800 per month? It's very much in flux. And I think this is the first month that I've seen going through the numbers that the phrase new normal is beginning to enter into the conversation. And is that the case, or exactly where are we as we parse out these numbers?
Well, I think my take on it is that this is the new normal as long as interest rates stay where they are.
Right,
We have a lot of
right,
people that they're like, well, I'm not going to move. I got a 3% interest rate, and rates right now are in the sevens. So that's
right.
a smart decision by that person, but that's what creates this market where there's a lot less transactions, from 1,100 down to 700 or 800. So that's a big difference in the number of transactions. But I think that, at some point, if we go fast forward 10 years from now, if interest rates are still at the same, the number of transactions are going to go back to the old normal because people are just going to have to move. Even if they are sacrificing a really low interest rate, their needs change, their family grew, they have to move for a job, those things are going to happen. Those things can get put off for a couple of years, but at some point that would change. But I would guess in the next 10 years, what's going to break first or change first is that interest rates will come down before people need to move for those other reasons in mass. And so, if rates come down to even 5%, it's a much different calculus on the decision than, going from 3 to 7 versus going from 3 to 5. So I think we'll see more movement at that point.
Yeah, very interesting when we look at those macros, interest rates and consumer life cycle events. And that's a very interesting cross-section of data that you don't normally look at. So it'll be interesting to see how that plays out.
And here we go. The average sales price, I think one of the numbers that people are most interested in, especially those people that currently own homes in Austin.
Right.
And so down 4.5% year over year.
But David, they're up. The average sale price is up month
over month.
Yeah.
Yeah, I think the prices have stayed quite stable considering everything that's gone on. Partly because of the low inventory. There's not a lot of options out there for buyers, even though there's way more than there were in early 2022 and 2021. But yeah, there's less options.
Yeah, so when we talk about stability in the marketplace, basically there's two ways to frame that. One is equity, values, and that's where our focus has been primarily on these reports when we talk about stability, is the values, the equity. But then we are really looking at the sales volume as well, and has that stabilized? That's the question that we've been bouncing back and forth so far in this video. But as we've said before, forecasting into the fourth quarter, you see the significant drop in the 2022 numbers as that year rounded out. And we're anticipating that the year-over-year numbers are going to level out, and at some point here before too long, into the first quarter, perhaps, we'll start to see some year-over-year increases as we measure this particular statistic. So days to sell have been trending up over the past few months, and certainly year-over-year. But when we look back to the first half of 2023, we were in that 60, low 70 days to sell. Here we're in the mid to upper 40s. Historically, that is within the normal range, and that's the more meaningful way to look at this as compared to the historically strong sellers market over the past couple of years. Look at 2021, 13 days to sell. Well, that doubled basically in 2022 to 25, and now we're doubling again. So I don't see that doubling happening one more time, and so that's really what we're going to be looking at. But right now, this is kind of in balance and kind of continuing the pattern that we've seen over the second quarter, basically, of this year.
Number of new listings down 1.5%, down 4.5% month to month. So, nothing, major here.
Yeah. And again, this is the story of what's not here. So what we're always looking for here is a big jump in new listings. And that will really begin to impact, as we've been saying, equity, average sale prices, things like that. As long as this number is in balance with the pending sales, the equity positions will be fairly stable. This is our meh statistic, David. Our fans seem to like that. They have resoundingly agreed that there's really nothing to see here, and so let's just move on.
The sales price to list price ratio. So I think you've called this the voodoo statistic, and we can see that month over month it's down a little bit, and year over year it's down as well. So just kind of falling in. Actually, it's now a little bit lower than what the previous trend seemed to be. If you look back to 2018, where it was in pretty consistently in the 98% range. So now we're a little bit down below that. So this number is bouncing around. Do you think it says anything with this small fluctuation we've seen here?
No, I don't see any meaningful variation there. You're at a very steady 97%, up to 98% for this year. And you look over the array of data The only real news was in 2021 and early 2022. That was the news. This is healthy stability in the marketplace.
Yeah. And maybe we could talk a little about seasonality. I think we'll get into that here when we talk
Yeah.
about the barometer, which is right here. So, our listing inventory barometer, one of our favorite numbers to track because it's the most real time. So, we're looking at this every week and we're looking at pending sales versus new listings. So, a lot of statistics in real estate are lagging indicators, and this is one of the ones that's the most real time that we can look at. And so, just to quickly explain, if this is your first time watching one of our videos, the number of new listings is here, the number of pending sales, so homes that went under contract. I say homes because we are only looking at single family homes for this, SFH, single family homes only, and then the ratio. And so this 100% line here would represent parity. So they're the same number of listings as there are pending sales. And over the course, this is going all the way back to December. So is that right? So December of last
That's
year.
December 21.
That's December 21. Okay, so we've
Believe
got
so.
a full year and a half here of stuff. Yeah, so
Right.
here's December of last year. So this is going
Right.
back a full year and a half. Every week is one of these bars, and the majority of them are above 100%, meaning that we have more listings hitting the market than we have sales. Okay, that's everything above. And then there's some sections here where it's below, where we actually were outselling the number of new listings in those time periods. And so when we look back at the last couple of weeks, you want to talk about that, Lee?
Yeah, I do. The thing that's caught my attention as I was going through the numbers is the past 2 weeks are the first 2 weeks since early this year, I believe January of this year, where we were selling less than 160 homes a week. This is the first time since January where we've been selling less than 160 homes a week, 153, 155. That caught my attention. And so tracking this is going to be really critical over the next 6 weeks as we round out, begin to really focus on the fourth quarter, first quarter of next year. That number is going to need to come up. We're going to need to see more effective demand because it's very precarious position with more listings hitting the market. You can see that number has been fairly steady, trending up just a bit over the past few weeks, 232, 249. As that ratio gap widens, and you can see back in May of last year and June of last year, that's volatility. And that's what volatility looks like. And we don't want to see that. So I'll stop short of going too far into what this could mean. All I'm saying is that it caught my attention, and I would really like to see the number of pending sales trending in the other direction over the next few weeks.
And one thing that this could be is just normal seasonality. It's the end of the summer, people have their last vacation. It's also 100 degrees out. So people are, more inclined not only to vacation, but probably spend more time doing other things rather than walking around the heat to go tour homes. So, there's probably a bit of that in here. Generally things do slow down a little bit in August, and we'll see here mid-September if things start to feel like they're picking back up again for one last push of the seasonality as we get through October, and then sometime getting close to Thanksgiving, things seem to slow down again. So, generally between Thanksgiving and New Year's, a little bit slow, and then people reset their New Year's resolutions, and a lot of those are, I want to buy a property this year, or I want to, move into a bigger home. And so we do tend to see the activity pick up in the new year, and especially as you get closer to the spring, which is the strong selling season. So some seasonality potential here, and we'll find out next month. So if you haven't gone ahead and subscribed, go ahead and go down there, subscribe. If you're getting a lot out of these videos, share it with a friend, give it a like, and we'll see you on it next month. But we still got more for you today. So
I totally agree on the seasonality aspect, but as we look at the next slide, David, we're introducing a new segment to our format on these reports, and that's tracking interest rates. And so I don't think that there's any coincidence that the recent increase a few weeks ago of the Fed fund rate also is playing into the psychology a bit. The election coming up next year is increasingly prominent in the national news. And I'm just saying that from my perspective, everything factored in with the interest rates, it's definitely something we're going to need to really keep an eye on. So here you have the numbers as of, I believe, yesterday morning when I ran this. And if you want to also familiarize yourself with the next slide, which shows a much longer trend.
All right, Lee, let's also take a look at historic mortgage rates. And what's interesting was, probably this period here. I just remember every time that interest rates went up, people would be like, "Oh my gosh, they're so high," right? They'd go up, and you can see where the 5% line is. So they'd go from 3% to 4%, and people are like, "Oh my goodness." And I bought back here in 2006. My first interest rate was 6.25 or something, and it was an adjustable rate, right? If I'd gone fixed, it probably would have been closer to 7. And so anytime something hit 4 or 5%, I was like, this is no big deal. I'm happy to buy 5% all day. That to me felt like still low interest rates. Now, Lee, when did you get started?
Well, I started real estate, David, back at the exact peak of
Right
interest
here.
rates,
This
which
is
were,
actually
that's when I
the
started.
mark. Yeah, this actually indicates Lee's start in real estate right here.
Yeah. Yeah, so when I got
So
out of school in 82, interest rates were 18%. And so as a young agent, guess what I specialized in? Expired listings.
cash buyers.
Cash buyers and expired. A lot of crazy financing back then as well. But yeah, I bought my first house, David, when rates dropped to 12%. So
And interesting you say crazy financing back then. I am for the first time starting to see agents email me like, "Hey, we're doing seller financing on this." And there's some more unique offerings out there. So if that's something that interests you, you're like, "Oh, can I buy something seller financed?" Please reach out. I've sold properties of mine seller finance, so we're quite familiar with how that works and the ways to structure that so it can work for you. But there's some offers out there. Generally, there are some luxury properties. I saw one that was in the 1 to 1.5 million range offering that because those buyers have more flexibility. And so you can see the long-term trend is down, and then we hit the all-time lows here in 2020, 2021, and then they're back on the way up. So still not anywhere near where they were at the very peak. We're not going to get anywhere close to that, but you can see if you run this trend line back across, this is kind of where they were in the early 2000s for interest rates.
yeah, and I really think that there will be quite a release of pent-up demand once the rates do begin to track down again. And I don't think it's going to need to drop back down to 3% for that to happen. And that's the looking ahead, when is the right time to buy? Hard to say, but the demand should be trending up dramatically once we get past this round of raising the interest rates, the market adapts. So I see equity gains in the future for folks that can get into the market, whether it be through acquisitions on seller financing type arrangements or otherwise. It's always a good idea to see what you can do out there in the marketplace.
Yeah, and I think your point that demand is going to increase, there's all that pent up demand once interest rates come back down a little bit, and we don't know when that's going to be. But I can tell you, so we don't know when the time to buy is, sometime between now and then. So I can tell you the time not to buy is once interest rates drop and all these other buyers flood in. So you do not want to be a part of that cohort that's rushing in because you're like, great, interest rates are low again. So finding a way to buy now, or let's just say in this period, whether it's the next 6 months or the next 2 years, while interest rates are still high, and you're going to pay a little bit higher of a monthly payment for the remainder until rates drop, but then you can refi. And so when everybody else is rushing to try to buy and competing with each other, meanwhile, prices are starting to increase again, all you're doing is going to the lender and saying, hey, I want to refi. And that's a totally, non-rushed process. You've already locked in your price. And so I think the savvy people are out there looking now, as am I. I actually have 2 offers out on properties right now. And so I'm trying to take advantage of this current market and and pick up some properties.
Yep, no doubt about it. The opportunities are out there for people who are motivated to make it happen, and that doesn't always require a ton of cash. And we, kind of reiterating the seller financing situation, there are some creative financing programs out there for buyers and investors. And when is the right time to buy? Sometime, I like the way you phrased it, sometime between now and when the interest rates do trend downward.
Yeah, and it's a lifestyle decision. People get a little bit too caught up on the investment side of buying a home, but it's really a lifestyle decision. So if that's your lifestyle, like you just got married, you had a kid, you need more space, or you're ready to downsize, whatever the factor is, do it based on that, and don't try to time the market. It's always a bad thing to try to time markets.
And just to wrap this point up, with buyers during this historically strong seller's market was really compromising on the home, compromising on the property, and being in line with 10, 15 other buyers, and having all of that, as you said, stress and fast pace, having to rush into decisions. Now's the time to pick the home that creates the lifestyle that you'd like to have.
Yeah, and to wrap up, Lee's wrap up is that I think it's easy for us because we've been through it every month, every week for the last 5, 7, Lee for, decades, and has experienced all these different markets and said, okay, the market as a buyer in 2021 and early 22, you don't want to be in that market as a buyer, right? This is the market you want to be trying to make offers and buy in. And so seeing all that, it's maybe not as easy for somebody that wasn't participating as strongly. And they're like, well, I'm just going to wait. And we're like, oh my gosh, if you knew what we knew about waiting until interest rates dropped, you would not wait. So we're trying to get that point across to you, and hopefully it has for those of you that are buyers. We've been talking a lot to the buyers. Sellers, I think if it's the time to sell, right, we have a property that we're going to finish completion on. We're building. It's going to be done in like October. It's like, what do we do? Well, we're just going to list it, right? It's the time to sell. We're going to put it on the market, and we know that we're going to probably have to wait a little bit longer than we might otherwise to find our buyer. But that's just the way it is. So ideally for a seller, you might wait a little bit if you don't need to. Let's say it's a second property, an investment. Maybe you wait a little bit if you're cash flow positive on it. But if it's something you need to sell, there's buyers out there, and we've had some really good deals for clients on the listing side in the last couple months. We had a client who had 2 duplexes, and he was just thrilled for the price, the way everything went for him. I forget if one of those, do we have multiple offers on?
No.
We did have some client listings though here in the last couple months that had multiple offers on them.
Yeah.
And so,
Yes.
so if you do the right things, you market it properly, you have the right strategy, that is possible still. Not that you should expect that, but it is possible. And so we've been able to get some really good prices and good terms for our sellers still, despite the market feeling like a buyer's market, although, at 3 to 4 months of inventory, it's technically not a buyer's market. So it's still a good time for sellers to put stuff on the market as well. All right, we're done with the wrap ups. Let's move on to, there's the link, by the way. If you guys want to check this out, you can pause that there. Let's talk about what's going on outside the city limit. So you might see a lot of stats where it just talks about the metro area. So that's lumping everything together. We feel like it's cleaner to actually separate it. So we talked about the city, now let's talk about the suburbs. And so here we can see that the monthly housing inventory for the 30-day pending is 4.15. There's 1,900 sales. So the suburbs is just a bigger market. There's, we're talking about everything in the 5-county area. So there's just more properties out there. Lee, anything on this one you want to touch on?
No, I just look at the stability really. In terms of the number of sales per month over the 12-month average, just over 1,900 the last 30 days pending. The closed sales in the past month and 3 months, all kind of hovering around that 1,900 midline on the number of sales. So pretty stable out in the burbs.
Here we've got the number of sales per month down 13% year over year. So again, this will also come up as we get more data in, but and then down 17% month over month. So a little bit fewer sales percentage wise compared to within the city. And then the average sales price, Lee.
Yeah, so here we're within our forecasted range, not as rosy a picture as it is in town, a slight decrease month over month of just under 2%. And then within that 10% year over year drop, we are anticipating again that as we round out the year, that'll trend towards an even break-even number or even a year over year gain, certainly into the first quarter of next year.
And this, we've talked about it on previous videos, just proves my point that I've been making for the last decade about buying in quality neighborhoods. I learned that lesson the hard way by buying the cheapest property in Austin you could possibly buy, I think, possibly, which was a single family home in 2011 for $84,000. I needed a little bit of work. I put like, 25K into it. So, but I should have taken my money and gone and bought in a better neighborhood where we saw better appreciation and it holds up better during the downturn, like this, whatever you want to call this. I guess technically it's down from where it was, so it's a downturn in some regard. So, and the city has held up better. So that's just a big generality. The higher quality neighborhoods, the places people know more about. Like if you're moving from California or New York, you know about Austin. You probably haven't heard of Buda or Taylor or Leander, these other surrounding suburbs that are in these numbers that we're looking at here. So if you're looking to buy right now, thinking about an investment or thinking about wanting to move for yourself, I would say go after the best neighborhood that you can buy in, and you're going to just do better long term.
Okay, so David, we take a look at days on market, and it's basically the same pattern, continuing to moderate month over month, down just under 5%. Outside the city limits, sitting at 56 days to sell, 2 months approximately. Sure, it's a lot more than last year, but it's within that reasonable range, and it seems to be trending in the right direction in terms of showing more demand with that decreasing number of days to sell.
And the number of new listings down 2.5% year over year, up almost 9% month to month. So, what do you think, Lee?
I think that this is in alignment with a steadily growing inventory of homes, but not enough to really throw off the equity position, so right on trend.
And then expired listings, actually up 13% month to month, but about in line with where it was last year. It looks like there's a pretty consistent jump from July to August for expired listings. So that's pretty standard. So I don't know that there's anything really here to see either.
Meh.
And then
the second month in a row, David, that we've been able to use the much beloved zero graphic. Shockingly consistent numbers over the past 5, 6 months, right at 97 point something, just under 98% sale price list price ratio. Truly a mark of stability. And the interesting thing, we call this the voodoo statistic because it's a lot of moving pieces, a lot of opinions, a lot of list prices, and so basically it just shows, I think, as we really look at this now, that the agents, the practitioners have adjusted a bit to their pricing of listings. I think is one of the things that's come out of this, is that the stability that we've seen over the past 6 months or so starting to show up a little bit in this sale price list price relationship.
I think buyers are this is indicating that buyers are watching our video and just telling their agents, we have to offer 97.86% of the list price. That's it.
And not a penny more. Not a penny
that's
more.
the number. I have seen people use that as a metric to try to figure out if they're making the right price. But remember, list prices are a bit arbitrary. It's just decided between the agent and the seller, and they could list super high, they could list low. So, this is just an average to give sentiment in the market, but really you got to be doing a BPO or a CMA, like some of these different terms. But basically, you have to be looking at the value of that specific home because it's different from neighborhood to neighborhood. It's hyper local, and so you really have to look at that home and then do what we do with clients is a price adjusted market analysis. And we're saying, okay, this home, the subject property has 4 bedrooms. This comparable property has 3 bedrooms. So what's the value of that 4th bedroom on the subject property? And then we add that in. So if you're making offers and you do not have some analysis on how much you should be offering, then reach out to us so we can help
Right.
you do that, and you can enlist our services as agents to help you buy or sell. We do the same process for sellers to make sure we're pricing things right, but you really should have a dialed in number there. And that's why we're so fortunate to have Lee on the team, who has spent 15 years as an appraiser and owning an appraisal company. So he is one of the best, if not the best, real estate agent in this market when it comes to valuing properties. So definitely fortunate to have him.
Appreciate that. It really is helpful to our clients to have documentation on where the numbers are coming from, and it often gives us a hammer that we can use in negotiating with other agents that don't necessarily have that level of due diligence to go into negotiations with.
As we wrap up here, thanks so much for joining us on the video. If you're getting a lot out of these, please share it with a friend. I think the message here is mostly that we're seeing stability in the market, and we know what to expect. It's not the craziness that, like, I remember January of 2021, all of a sudden overnight prices went up 20%, 30%, and it was really hard to adjust. But over the course of a couple days, weeks, we did, and everybody figured it out. But what we have now is pretty stable. As buyers, you can go out there and take a little bit more of your time, which is really nice. Sellers, you just have to be a little bit more patient, but there's still transactions happening. Seeing transactions down from 1,100 within the city to about 800, right? That's a 30-ish% from a couple years ago down. But that means that 70% of transactions are still happening, right? So most of this is still moving, and the market has contracted a little bit, but still stuff is happening out there. And we've seen bursts of activity at times. I think for sellers, it's hard to know, like, do I list now? Like, do I wait to list? The bottom line is just get your property on the market if you're going to want to list it, and just see, like, you never know when that right buyer is going to come along. And we had a 3-week period, I don't know if it was last month or the month before, where in 3 weeks we put like 7 properties under contract. And it just was like, okay, there's a flurry of activity right now in the market. And now in the month of August into early September, there's usually a little bit of a lull. That's normal, but everybody's expecting it to pick up here again mid to late September into October. And so if you're looking to sell, please reach out. We can talk to you about strategy on that. And if you're looking to buy, hopefully that means there's some more listings available, and there's some opportunities for you. But there's definitely good properties out there. We'd love to chat with you more. If you want to strategize on this, there's a link below. You can schedule a call with us, or feel free to message us on whatever platform you feel is you like the best. But thank you again for joining us. Again, go ahead and subscribe so you can catch our next video, and we look forward to seeing you then.
Thanks, everybody.